Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, the Australian dollar has continued to sink since posting its long-legged doji, which gives us a sign of indecisiveness as the market looks towards the level of 67.4550. It is assessed the bulls should soon come back into play. I'm not getting bearish from here. I think the market will stage a recovery because the ADX is overheating, and also the fact is the MACD is getting to a point that could see a turn as the RSI is attempting now to climb out the bearish trenches. Later today, the market will be turning to the RBA at 2:30. It is widely expected that the central bank will leave its benchmark overnight cash rate unchanged at 1% on its announcement. However, the market will comb over the rate statement looking for guidance hinted by the RBA Governor Phil Lowe to what the central bank is thinking. From the technical assessment, I would like to see at least a rebound to 68.10 and maybe even towards 68.45 to get us out of this 13-day decline, one of the biggest ones I've seen in many months. The euro, since posting a bullish hammer, has continued its trek and rallies hard through the level of 111.7080. From a technical point, although I was looking to shorten the market around that level, the target is now slightly higher to 112.8090. I believe the market will struggle around this region and we should see a drop. From a broader picture, overall, I do expect to see these gains given away. It was only 2 weeks ago that Mario Draghi hinted of a possible rate cut, and with the chances of euro advancing, I'm not sure if the ECB will be happy to see the euro up around these levels and could actually bring the forecast forward to a rate cut from September to maybe this month. But let's see. For now, I do expect to see the market test the top side of the range before turning around. A very sharp response from 105.80 this morning, and the market now looks for dollar yen to retrace back to possibly a target of 106.6070. We're not quite out of the region yet of safe haven demand, and therefore we could see a return back to this bottom side of the range. Let's see how today plays out. Sterling still consolidating above the level of 120.5065, and it is assessed that the market will probably likely to continue there. However, my concerns of a break would give me a target of 119, which does sound a little bit dramatic because we could actually see 116. That is only if we go through 120.50. We finally got the break in gold above the level of 1,455. We have seen a high today of 74, and it's dropped back slightly. Waves of demand emerged overnight as investors turned to safe haven demand like treasuries, yen and gold. Both bullion and futures of gold hit 6-year highs on Monday as the trade tension took to a higher level between Beijing and Washington after China devalued its currency in response to President Trump's trade wars. China allowed the yuan to tumble to its weakest level in 11 years against the dollar to retaliate against the US president's plan to impose new tariffs. President Trump fired back a barrage of tweets aimed at China and accusing them of currency manipulation. This is a major violation which will greatly weaken China over time, Trump tweeted. So with the highs last seen around May 2013, up around 40, where we are at the moment of 1,470, and the break of 55, we should see the target now eventually reached at 1,500 and reassess from there. While we did briefly break under $54 this morning, but the market's staged a bounce. And from that, I'm keeping a close watch because this could be a hammer. If it does turn into a bullish hammer, like this one in the euro, then oil could be staging a rally back to 56. Let's see how the market plays, but it did break 54 today, so I'm a little bit cautious of the call to the upside, But if it's a hammer, I'll be more comfortable with the call back to the top side. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the great start to this new day.